The word is out. Everybody's moving into Sacramento. Everybody realizing that we have so many new homes, resale homes, fun things to do, close to Tahoe, still close to the Bay Area, and it's affordable California. But in 2026, when is the right time to buy? We're going to talk a little bit about the little things that you need to know about the Sacramento real estate market that are going to put you a little bit ahead of the pack. So if you're thinking about buying, and if you live in Sacramento and you're thinking about selling, this video is going to keep you in tune with all the little things that happen during the course of the year that you should be aware of. And it's going to keep you a little bit of step ahead of the competition, because if rates drop, we're going to see a lot of competition in the area. Let's get into the video and let's talk a little bit about the Sacramento housing market 2026. All right, guys, this is a show we do every single Wednesday at 7 p.m. So you can keep a little bit informed about what's going on with the Sacramento housing market. Myself, my team, we're out there all the time. I mean, we are out there in Elk Grove. We were out there in Arden today. We're out there at El Dorado Hills, and now we are back. Today, actually, I got back to my office probably about an hour before the show started. So we were kind of out all day. Car troubles also and everything too. But it was a very, very crazy day for myself and my team. So what we normally do is we come in every single Wednesday. We talk as a group. Now, I want to get more of them on the show, and we talk a little bit about the situations we're having with buyers, sellers, the conversations we're having with like mortgage professionals, new home communities that we're bumping into and everything too. So that way this show can inform you on exactly what's going on. The truth of the matter is, if someone did a video maybe 3 months ago, it's going to be a little outdated because our market changes very, very fast with all the new home communities we have going on, with all the development and growth happening in Sacramento. So this show's for you guys, for all the people who are thinking about moving in. Bring your questions. I'm going to see what I can do. I'm going to go as long as I can without putting the old glasses on. But like I said, it is what it is. All right, guys. Thank you guys also, and I appreciate you guys tuning in for the show. Now, for all the people that are watching the show tonight, I want to hear your comments. I want to hear your questions. If someone asks a question in the comments, feel free to answer as well too. This is also a forum for all the people that have moved here, lived here, thinking about moving here. So this is going to be that place that you can get also a lot of information from people who maybe made the move, maybe have lived here their entire lives, maybe don't even like it here. And it's kind of fun. And that's one of the things that this channel does that no other channel does in the Sacramento area. Okay. So now let me get off my intro and let's get into the video. Now, as far as the market goes at this point, it's actually feeling a little slower than it did last year. Last year, it was interesting because January, February, just before Super Bowl, there was a big tick. It was a boom. Everyone was anticipating last year was going to be a huge year because end of December, January, and February up till the Super Bowl were huge. It was like people were coming in, people were buying. A lot of people were making that move and everything too. And then the Super Bowl hit, it downshifted, and then demand kind of slowed down. This year has been, I mean, it feels a lot like 25 at this point, but it just feels a little bit colder. Although the market is still moving, there seems to be that divide between sellers and buyers at the same time. There seems to be a little bit of a divide too with buyers who are looking for new homes. Some new homes are pretty much saying, I'm not moving. Some new homes are like, I got some incentives for you guys. We can work on the price. Let's see what we can do. There are really fun areas in the Sacramento area to look at if you're looking for new homes, like Rancho, like Roseville, like Folsom. There's El Dorado Hills is pumping out a whole bunch of new homes in 2026 as well too. Toll Brothers, Lennar, and everything too. You got Rockland, you got Lincoln, then you got the outliers, like you got Plymouth Lake and Linda, where you can still get something for 300, 350. And then you got a community opening up in Grass Valley. So there's fun things happening in the Sacramento Metro. I truly believe Sacramento is one of those spots where you can find anything. If you're a golfer, golf course communities, here you go. We got a ton of them. Catavadera, Serrano, we got a bunch. If you're someone who likes boating, we got we got rafting, we got boating, Folsom Lake, Lake Natoma, what's called American River, Sacramento River. There's so many things to do. And for people who like skiing and snowboarding, yes, please. It's an hour and 20 minutes away. So it's really a fun place to live. And for people who are looking for maybe older homes, you got the East Sacramento area. We're actually listing a house that goes on the market tomorrow. Two homes, really, really cute. One was built in 1920 and one was built in 1934. And it's in the Arden area, Wilhagen, super cute. And then on the other side, we got another house popping on the market in Elk Grove, single story, cute, cute, cute house. This house is going to fly as well too. So that's what we're seeing in the market. But at the same time, like I said, comparatively towards last year at this time, it was just crazy, crazy. Now, I'd give it an 8 compared to last year. So we're going to talk a little also about all the things you have to go through this year, all the little weird things like the Fannie Mae buying bonds. We're going to talk about Jerome Powell leaving in May. We're going to talk about all those things like the spring market, when people are really active here, when they're a little slower here. We're going to talk about all that stuff too. So if you're thinking about moving into Sacramento, I'm going to give you a little bit of an outline on when it's popping, when it's slow, and all that stuff too. So we'll get into it. And now the glasses go on. All right, guys. Hello. Hey, welcome to the show. All right. Glad I made it again. Happy to be here. I'm happy you guys are all here. I'm really, really super, super. All right. Multi-unit rentals. Are there some good deals out there today? Okay. Here's what I'm learning. And I want to bring Corey on the show again. One of the things about Corey, and we were talking offline, is what we've been finding is you got to go high on the units. You got to go fourplexes. You got to go higher than that to see something pencil. Still possible, but it's still a little hard. Where we're seeing a lot of for people coming in and buying stuff, it's warehouse spaces, industrial spaces. A lot of people are realizing right now that with all the AI stuff, the trades are really, really going crazy, and the trades in Sacramento need more warehouse spaces. So we're seeing that some of the only deals we're seeing really pencil at this point are people who are buying warehouse spaces and they're renting them out like that. And with warehouse spaces, there's not a lot of upkeep. There's just a big space and there's good ROI on that. Now, if you guys have any interest in that type of investment, and honestly, there's some good deals coming up in those, hit me up. I'll tell you exactly what Corey and I have been kind of brainstorming for our next live. We'll get you a little bit ahead of the pack, but those are going to be something that's going to be really interesting. And I know normally on this channel, we just talk residential and everything too, but it does make sense. My brother-in-law is into that stuff too. And he's going warehouse. He had one warehouse, then he had two warehouses, three warehouses, and now he's on to his fourth warehouse. And so we're seeing just warehouse spaces kind of pencil, and that's kind of it right now. All right. Is there any new communities that don't have HOAs or Melrose? Not sure if it's possible, but was curious. No, nothing that I'm really seeing. You're going to have some of these builders that are building like one-off homes that don't have Melrose, like in the heart of stuff. But for the most part, I haven't run into any communities lately that don't have Melrose or HOAs. And I would say HOAs, maybe 30-40% of the communities have them. But at the same time, that's kind of what you're going to run into in the Sacramento area. Some HOAs though, are gonna be like $34 or $20. I call them CC and R HOAs. They're basically put there so that there is something enforceable. So if your neighbor decides to park 5 cars on the lawn, you have some way to kind of like take care of that. And here's the thing for you guys as well too. HOAs, I'm not a big fan. I live in an HOA community. I don't really love them that much, especially in my community. But I will say this, that if you're moving into an area and you're gonna put money into a house, you got the kids, you got all that stuff for appreciation. You need some sort of way to make sure that, everyone's kind of keeping up the neighborhood and everything too, because that is going to affect your bottom line if you ever go to sell your home. Back in the day, I sold this one home in Elk Grove. And the reason why the guy moved is he's like, the people next door are just not treating their house well. And he was surprised because he wasn't able to get what he thought he would for his house. It was mainly because the neighborhood had kind of just didn't work for a lot of people. So I would say HOAs, depending on what you want, $20, $30 one might be okay. Maintain a little order in the neighborhood. So that would just be me, my own 2 cents on it. Like if you don't like HOAs, hey, more power to you. Also what I've been noticing too is a lot of the HOAs, they don't like the $20, $30 ones. They don't really do too much enforceable. Like there's some in Rancho, there's some in West Roseville for the new home communities. And I'm seeing people put in sheds. Some communities are letting people put in ADUs and everything too. So before you pull the trigger on your home, also make sure you take a look at the HOA guidelines and the rules and all that stuff too. Now, there are some HOAs in new home communities, what you're going to notice is the HOA is maybe going to be like $250 on a new community, but as more people move into the community, more homes become sold, the HOA will go down in price. I saw that happen up in Russell Ranch too. So just to be aware, that does definitely happen. Okay, so let's get into some of the slides too. Let's talk about this and then we'll jump in. Now, you know what? Let's jump into like some of the things that I've been seeing right now happening. One is I think 2026 is going to be about pricing. Yes, rates are going to be hugely important, but I also think it's about pricing. I think a lot of people have held back and pulled their listings off the market last year. They're thinking to themselves, we're going to list in spring. I know a lot of realtors right now that have pocket listings and are ready to go springtime. Now, here's what I'll say. It all depends on how these houses are priced coming into the market. If our interest rate stays to where it kind of 6.5, 6.3, and they're listing at the same price they listed last year, then we're going to be in for the exact same type of year we had last year. I think buyers are going to not bite on it. And I think they're not going to buy those houses. I mean, if you saw our appreciation, it kind of flatlined or it kind of
plateaued. So for me, I would say like if you're someone selling your home and like let's say you were listing it for 1.1 million and you're going to be listing it this year and interest rates are still in the sixes, kind of same thing as last year, you know, I don't see there being a real benefit in listing it at 1.1. I would say do a little bit more aggressive pricing because I see the same results happening this year. A lot of people I run into are thinking this year is going to be a mimic of last year. And it'll be interesting to see. I mean, because there are things that are happening this year that didn't happen last year, like Jerome Powell leaving office in May. And also, I do think that what you noticed, like last week, for example, rates kind of dipped a little bit. We were under six for just a little bit. I think media is going to play a big, big hype in the bond market. I think you're going to see, crazy things happen like, oh my God, I'm forcing Fannie Mae to buy $200 million worth of bonds. And all of a sudden, just from that announcement alone, it's going to trigger the bond market, which is going to affect interest rates. So I think there are going to be little pockets of opportunity. If you look here, right here, you're going to see that the outburst costed a little pocket of a dip, but then it went right back up. So I do think in 2026, there are going to be these moments and these pockets of opportunity. Now, a lot of people are thinking to themselves, if rates drop, then all of a sudden I'm going to be able to jump into the market and rates are going to be lower and I'm going to be able to buy those homes that I've wanted to buy. Now, the only bad part about this is that you're not alone. There's a lot of people right now on the sidelines who are saying, like, when rates drop, I'm going to jump into the market. So that's going to create a big piece of demand in our market. Now, like I said, there is going to be additional inventory definitely popping on the market in spring. But what you're going to notice is all those good homes that you guys have been waiting for, the ones in Folsom, Elk Grove, wherever, you're probably going to see a lot more competition, especially if we're in the fives. And, you're not going to be the only one waiting for a low interest rate. A lot of people that I've been talking to right now have been saying, you know what, I'd much rather, if I see the house I like, I'd much rather, grab the house and then plan on doing the refi later on when rates drop. And I think there's some validity to it. I mean, the idea is that if you see a little bit of a dip, like we just saw, like on Friday where rates dropped, I mean, honestly, like look at that thing. Like, think about this. How fast are you actually going to be able to find a house, lock in a rate, and make sure your inspections are good and everything too? So just understand that I don't know what's going to happen this year. But in my personal opinion, I think it bodes better to have a house. If you're on the side of rates are going to drop this year, I think it bodes a little bit better to have that house, not do the competition, wait a few months until you believe rates are going to drop. And then when rates do drop, if they do, then you go into the refinancing and then you've already got the house. So you don't have to deal with it. You just got to refinance and you're good to go. So for me, I kind of like that scenario. But again, one of the things that our buyers have been having problems with is that the inventory isn't what they like. A lot of inventory is being pulled and going to be relisted in spring. And the ones that even go right now tend to fly pretty high. But I would say for you guys, a good strategy, if you think rates are definitely going to be dropping in May and June, and, maybe even like, when Jerome Powell goes, is the idea is if you find something, maybe it might be worth your while to pick it up and then plan the refi when you think it's going to happen. And that's just my 2 cents. Like I said, everyone's got to do what's best for them. So let's go into some of these things too. Actually, let's talk a little bit about the topic du jour. Okay. So like I said, we have 4 listings on the market currently right now. We have one in Folsom, which is giving me a big pain because we're just getting ready to close that thing too. And the realtor, after inspections were done, said, hey, my client wants $8,000 or we're not going to close this deal. So that's been a pain right now too. But you are seeing buyers get really, really nervous. A lot of buyers are pulling out of deals because they really do believe that, in May or March and April, we're going to see this new inventory, not inventory, but all this brand new inventory, and rates are going to be down at like 2.75, and they're going to jump in, they're going to get a lower rate, they're going to find the house of their dreams, and that's going to happen. So that's kind of why I see a lot of buyers kind of pulling out of some of these deals. Again, myself, if I'm looking at a house and I'm thinking rates are going to drop, I'd rather not deal with the competition. I'd rather grab it than refi. Again, that's if you are in the camp where you think rates are going to drop. Again, guys, as we say on this channel, time your life, don't time the market. Okay, so let's talk a little bit about some of the stuff that I see being like triggers for this year. Number one, in our market, as we saw last year, Super Bowl is a big, like, I don't know what it is about it, but after the Super Bowl, normally what you see is in the next 2 weeks, you see either like the market's going to be crushing it and you're good and like, oh my God, inventory is going, demand is high, or it slows down. It's something about the Super Bowl, but it's a big trigger here in the Sacramento area. I don't know if it's like that in Houston or anything, but I've noticed in Sacramento consistently, it's like right after the Super Bowl, you can kind of gauge how the year is going to be. Now, black swan events happen, that could change, like we go to war or something like this. Like, of course, all bets are off. But for the most part, if we have a year kind of like last year, I'm guessing that a couple weeks after Super Bowl, we're going to be able to tell how the year is going to go. Last year was the same thing. After the Super Bowl, we saw demand decrease and it kind of followed suit the entire year. All right. So that's one thing to look at. Now, March and April, if you don't know the Sacramento market, you're going to know that some of our buyers that come in fact, I would say maybe like 40 to 50% of the people come in like from the Bay Area. And so what we notice is that during the time of like March, April, May, maybe all the way till July 4th, what you notice is that we have a big push here, right? It's a lot of open houses, a lot of competition. People are out here looking to homes because of schools. A lot of people in the Bay Area want to come out here, set up their schools. They want to get their house. They want to get all that stuff out of the way. So what we notice is that here in the Sacramento area specifically, because we are a little bit of a funnel towards areas like LA and San Francisco. Like I said at the very beginning of the video, I look at us as affordable California. I think the Bay Area, not really affordable. Los Angeles, not really affordable. So you look at a lot of people who live in LA, live in the Bay Area, they're probably still renting or owning a little condo. And they're saying, you know what, we got the go ahead to work at home. We're going to trying to make the move to Sacramento. And we got to make sure that we got the schools locked in. And so a lot of people start making the move in March because they start engaging with the schools maybe in April, trying to figure that stuff out. And then if they could lock in the school, lock in the registration, they're good to go. So in our market specifically, it starts getting a little warm. End of March, April, a little warmer, boom. May starts really getting bubbling. June, same thing. And then July. Now, in our market specifically, what we notice is that July 4th is a big one here in Sacramento. Everyone's on their boats, everyone's partying, fireworks are going up, and it's crazy. DUI checkpoints. It's just kind of crazy here in Sacramento. But what I've noticed in Sacramento is around July, things start to slow down a little bit, right? A lot of people are taking their last vacations before the school year. And so it just slows down just a tad bit. And then August and September, depending on when school is, people are more focused on getting the school going and everything too. A lot of people who might have been looking to Sacramento and haven't found what they're looking for at August, September, they tend to kind of pack it in and say, maybe next year it just didn't work. We got to focus in on school, getting the kids all set to go, and we're good to go. And then what we notice is October, November, December, January tends to be a little colder. We start gearing up for the next year. There may be a little bit of a burst here and there, but it's not going to be a tremendous one. But there's little pockets of opportunity during that time period. Now, for me, if I'm looking to resale home, I love that time. Weather's bad. A lot of people are dealing with the holidays. And if you can find the right amount of inventory that works for you, oof, you can make some good deals happen. Because what I've noticed is a lot of people who have their homes for sale October, November, December, and January, they realize it's a slow time of the year, but they got to sell their homes. What we notice is people who are sitting on 2.75s tend to pull their homes from the market during that time because they realize that springtime is going to be that hot market, Bay Area buyers, all that stuff too. So that's kind of how our market a little bit breaks down. Now, how does this play out for new homes, right? New homes are interesting. What I notice is what you see is you get the best incentives October, and it slows down October, November, and December. And then all of a sudden, January, the incentives are still pretty there, but it's all dependent on how many quick move-in homes they have and how many they've sold in the end of the year. Now, it could keep going. Like this year, for example, they didn't sell as many as they needed to. So you still have crazy incentives going on in the new home. But, each year is a little bit different, sorry. Some years, like they sell all their quick move-ins, and by January, a lot of the incentives or the good incentives are already gone. In our market currently, what we're noticing is that there's still a lot of incentives. There's a lot of new communities being built. Placer 1 is underway. Taylor Morrison is going to be building another one in Rancho, as well as in Folsom. El Dorado Hills has got 2 monster communities underway. They've also got that Toll Brother 1 acre place or 1 acre lot houses being built. I think 2 million is the minimum there. You got Shawwood that's going to be building in West Roseville. Man, you got so much building happening too. So there still are a lot of incentives at the new homes. Now for you guys, it's kind of a cluster out there, to be totally honest. Like I was talking to this one person, they're like, yeah, we're looking for something around low 500s. And
I was just thinking for a second. I'm like, okay, so what area are you thinking about? And they're like, well, we're not really sure. We're just thinking somewhere near Sacramento, somewhere maybe 20, 30, 45 minutes from Sacramento. And I was like, okay, this is where a needle in the haystack kind of comes in, because the communities for $400,000 and $500,000 are needle in a haystack. Okay, they really, really are. Like Rancho's got your Aspen and your Willow. Rancho's got Kahov, which is doing their one community in the fives. Then what else you got? You have Elliott, who's building out there as well too. And then in West Roseville, you have what's called, I think you have that new Meritage that's opening up. You have one DR Horton community that you can get there. Lincoln, I don't think there's anything right now for the fives except for LGI. So there's needle in haystack. So I would say whoever you're working with, just make sure they know new homes, they knew the entire area, because it's really, really getting to be there's so much new home building that if you're someone who's looking for like a single story home with maybe a half acre lot, you really got to be looking for someone who knows that kind of stuff and who's out there. And that's kind of one of the things our team is kind of like leaning on heavily, because we communicate with the builders almost every single week. And so we know about every single new community that's coming out. Not every single new, probably 90% of the new communities are coming out. So for you guys, if you're looking for new homes, just understand it is a big undertaking. It's not something that you can come out here and just like one day go see them. It's confusing, right? You got Elk Grove, you got Vineyard, you got Rancho, you got West Sacramento. Whew, you got South Sacramento, you have Natomas, you have Folsom, you have Rancho, you have El Dorado Hills, you have what's called on the other side. Then you got like Grant Bay, you got West Roseville, you have Rockland, you have Lincoln, and then the outliers, you have what is it? Plymouth Lake, you have Linda, you got Wheatland, a new one opened up in Galt as well too. So there's so many communities, and a lot of people might be thinking, oh, that's not a problem. But here's the thing, the drive between like what's called Folsom to Rockland, that's like almost an hour drive right there too. So if you're thinking about really kind of mapping this stuff out, you're really going to need to work with a team who actually kind of knows new homes, because at this point in time, there are so many builders. There's got to be at least 120 communities at least in the Sacramento area to check out. Yeah, so it's crazy how much new homes are so into our market right now. And they also, for the people who are looking for resale and don't want new homes, I would honestly say that because we have so many new home communities, resale the prices are a little bit dropping on them. So that ain't bad. All right, video guy Matt. There've been some wild listings this week though, like sellers who spent 6 months on the market at 700K and now are listing at 720. I know. Like I said, like I started this podcast and I was like, pricing is going to be a big one. Yeah, interest rates, we're going to see blips in here, but it's going to be interesting when the relist homes hit the market. And if the sellers are kind of like, okay, look, last year we weren't able to sell at 1.1, are we going to sell at 1.1 this year, considering the market could be the exact same? Or are we going to sell like at like 9,999, do a little bit more aggressive pricing and try a little bit to mix it up? I see realtors all the time right now. They're like, oh yeah, I'm the 5th one listing this home, and they're still listing at the same price. Yeah, I'm with you. I've been seeing a bunch of those myself too, and it just completely boggles my mind. There's going to be a lot of people that are going to be doing open houses. So yeah, I don't know. For me, I just really, really, really hope that pricing gets a little bit better. All right, inventory is in the market. Sweet inventory, all overpriced, all sitting unsold. Yeah. I do think that right now what I've been seeing is that if you're listing a home or if you're a listing agent, we've turned down maybe like 7 or 8 listings within the last like 6 months because the price point, we just didn't feel we could sell it. I don't really believe listing in the listing. I believe like if we list something, I think we can sell it. Even the house we have in Verdera, I think we can get that thing sold probably within the next 6 months. It's a larger house, larger price point, but I still like that house. I think that what you're noticing right now is a lot of realtors are just grabbing listings or the 4th one. And, you have sellers who are sitting on 2.75s and they're going to be relisting in spring and they just don't want to bring their price point down. And that could really, really kind of like mess up the market. Hopefully it doesn't, but we'll see. All right. Any change of scenery? My town is boring and some of my neighbors are real tools. Well, I'll tell you something. The beautiful part about the Sacramento area is that, like, let's say, for example, the Sacramento area is so different. You can go to the Pocket,
You're by the water, completely different vibe over there. Elk Grove, completely different vibe. Um, so I don't know. I mean, for me, like it took me a while to figure out exactly where I wanted to live. And then, of course, it came down to the rule of life, happy wife, happy life. And so I chose Gold River, family here and everything too. But in Sacramento, you can definitely find some fun stuff. I've enjoyed Sacramento because honestly, like it's a very much a driving city, right? A lot of people might go, oh no, there's public transportation. They're full of it. Sacramento is straight up a driving city. And so for me, there's all these new communities popping up and everything too. Um, I don't know. It's just a fun kind of like area to live in. All right. I'm a 2.625 interest rate near Folsom. Ooh, yeah, you're one of those. Yeah, that's a tough one. I mean, honestly, even though you're not loving your neighbors or anything too, I'm telling you, that's a great interest rate. I don't, for me, I don't even know if I'd sell. I mean, rent it. I mean, Folsom, you could probably do pretty good for the rental as well too. That's a tough one though. Honestly, a 2.625 interest. Oh man, you know, um, yeah, I don't know. I mean, the hard part is when you have an interest rate that low. Let's say you sell your house and you let's say you make like a good amount of change on your house. Like you're like, I sold my house, I made some money. Then all of a sudden you look at buying, and then you look at like getting like a what 6.2, 6.3 interest rate. And even with the money you made, you're still buying like a smaller house or something that just doesn't make sense. So that's what a lot of people are running into right now. All right. Boom, boom, boom. They raise the prices and can offer the deal of lowering prices for a potential buyer. They raise the price so they can offer the deal of lowering price for a potential buyer. Yeah, at least for me, what I've noticed too is, and the ones that we've been really successful with this year, they've gone all above list because of the aggressive pricing. I don't like the idea of listing high and then dropping prices at all. I like the idea of listing where I think it should be, maybe even like $10,000-$15,000 below that, and then doing the aggressive pricing. I've seen that be a lot more successful in this market than anything else. Um, I also think one of the things that's kind of messing with people as well too is that you got to comp right as well. I've seen a lot of people look at a house that's new on the market. We get a lot of calls and it's like, oh my God, I saw this house. It looks like a great deal. And I'm looking at it, I'm comping it out. And I'm like, well, they're bringing in comps from Serrano and like this house isn't in Serrano. So you can't really comp out that way. So I think also for anyone out there who's like really new to the market, you got to know really exactly what you're doing. You got to know what communities are bringing in houses to do comparables and everything too. It can be very, very confusing. I've seen that happen times at Gold River, even where I live. A lot of people are like adding the manor homes to the non-manor homes to like Gold Station to everything too. And it's just, a different price point, a different average median list price and sold price. So you've just got to really know what the comps are, because if a person comes into this market and they don't really even know this market, they're going to be looking at something at Folsom. It's like, oh man, Folsom, everyone tells me it's awesome. 1.2 million, man, that looks fantastic. And I mean, it could be a seller kind of hoping they get lucky, put it on for 1.2, but they really know it's worth 1.1. So I don't know. It is a tough one. All right. Boom. Thoughts on grants? I saw a FHL Bank SF 50K middle income grant. Just straight cash if you can get into contract within 2 weeks after the funds are gone. Starts March. Member banks. I'm going to start bringing on some of those programs because I have actually heard that the Dream for All might actually be back. So for me, what you're going to notice is too, and this is outside the grants. Grants I like. Grants are like free money. That's great. But I also think a lot of people get too enamored with the idea of something that's labeled first time buyer program. And if you do look at the interest rates, and I'm not a lender, but every lender I've talked to, and I'm like, hey, my client wants to know about the first time home buyer programs. He's like, if you look at the interest rates, they actually end up paying more. So I'd say really look at the rates. If you can qualify for a grant and it's completely free money, I mean, why not? I think that's good. And if the California Dream for All home still comes out this year, I'm going to do a little video on it. All right. Buyers aren't complete idiots, or at least most of them, so they won't be fooled by dumb games. People who want to sell, you need to be aggressive with list price on this spring. I know. Again, video guy Matt, same. I'm with you. I think. Okay, let's just say we have the same year that we had last year. Let's say it's like the same year.
One of the things that really, really started to kill last year was the fact that sellers were listing stuff at such high prices and buyers were like, no, I'm going to Disneyland. I'm not doing this. And demand started to drop really, really kind of like bad in our market. And it was just because of, sellers kind of pricing too high. They didn't realize what market they were in. So I do think also we have a lot of 2.75ers that list, put their house on the market and they're like, if I can get that 1 million, I'm selling my house. If I can't get it, I'm not selling my house, which I mean, I get, don't get me wrong, but I think that also mucks up the market just a little bit. I remember bumping into houses and I was talking to listing agents going like, that house is listed at 1.4. There's nothing in that neighborhood that's sold for 1.4. And they're looking at me saying, yeah, I know. I mean, and they're telling me this straight up. If it was me, I would have listed it for like 1.25, but my seller's like, I want 1.4 and I'm not going to budge. And that's just what I want. If we can't get it, I'm either going to rent it or I'm going to keep living in it. So I don't know. I think that's it. 2 refis in 1 year. And see, I think that is the way to go. I mean, for me, I'm not even like at this point, like, my house is good. I give my house an 8, right? I mean, you're never going to have that 10 house, but I give my house an 8. So there's always that kind of itch, especially if you're a realtor, you're always seeing houses. And it's kind of crazy. But I would say for me, I'm looking more if rates somehow do a miraculous drop, for the refis as opposed to anything else. I don't know. I don't know if we're going to get into the 4s or into the 3s. And I doubt it. I mean, if I was a betting man, I would definitely not bet that. I do think there's a chance this year that, there are going to be little blips and moments where I think we might get into the 5s, where I think refinancing might make sense. I just, for a lot of people who are thinking about buying and saying, oh yeah, rates are going to be down to the 5s. Then I'm going to, those houses in Folsom that look amazing. I'm going to jump into one of those and buy it. You're going to have a lot of competition doing that. If rates get into the 5s, I feel bad for you because you're going to lose out. In fact, even the Folsom house that we had, the Folsom house that we're listing right now, part of me, I told the owner, I was like, look, here's the thing. Honestly, like it's a view house. It's absolutely gorgeous. If rates drop in the 5s, you could probably sell it for more than our offer is right now. So I don't know. It will be very interesting of a year. All right. I'll buy your Folsom house if I can, if I can assume that 2.65 interest rate. I know. Now, that's another thing to take in mind. Okay, so if you're looking for deals, everyone's always looking for deals. I would say also if you could look, I mean, Zillow lets you do this. You can actually type in assumable and you can find out if there's any deals out there for people trying to put their, sell their home. It's only FHA and VA, but you can find an assumable loan. So assumable loan. So if you find something with a 2.75, you can assume that, there is criteria. There's a lot of hoops to jump through. You also have to check how much of the house is like 80% is a loan. You know what I mean? You have to figure that out as well too. But I've seen people make great deals with assumables as well too. They're not easy to find, but if you can jump into one of those and actually jump through the hoops, that is not bad at all. I don't want to sell either. I want to move to my land in Guatemala. Look, I'm telling you, and I'm a realtor, so, we love selling and buying. I wouldn't. I mean, if you like your house, if you got like a house that you say to yourself, yeah, I like it, maybe the neighborhood. And then, like you said, but at the same time, I think this market, it's not a fun one. I don't think it's a fun one for sellers. I don't think it's a fun one for buyers. I think that's one of the big stalemates we've been having right now is there's not really an advantage. I mean, you're going to see all these people like, all these realtors just crack me up. They're like, oh, it's a buyer's market. There are deals out there. I can tell you this straight up. A majority of my clients are like, yeah, there's deals out there for the houses that we don't want to buy. You know what I mean? Like those are the deals. So, I just think it's a stalemate. I think buyers right now are frustrated with the sellers' prices. I think buyers aren't seeing a lot of inventory that works for them. And I think they're okay to wait. And then on the seller's part, I think sellers are thinking to themselves, I want to sell my home, but I want to sell it for what I want to sell it for. And I got a 2.75 and I'm willing to either live in it or rent it until I get what I want. And so there's a big stalemate happening here in the Sacramento area, which for me is crazy. All right. Mark, last week we were talking about rates dropping into the 5s after Trump's announcement. Rates tanked quickly and reached 5.9, I believe. How do you think this will affect our area? Honestly, it was so funny. Like, I'll bring this up again. Here, look, this is the announcement right here. Boom, hit, and then went right back up. And that's kind of one of the crazy things. You know, I don't know necessarily because I mean, I'll be able to show you some stats in a little while about like how that 200, what's called a billion is kind of like adds up to the whole bond market and everything too. But I'm going to show you it's kind of a drop in the bucket, you know. So do I think it moved the, you know, interest rates to dip a little bit in the fives? I honestly think based on what I've been looking at, what I've been reading and everything too, it was more about the announcement. It was less about really like the bond market and everything too. It was more just about that night announcement. I mean, have you ever noticed how like when Jerome Powell is supposed to make an announcement, something that's going to revolutionize the industry, prior to him making the announcement, that's when the rates drop, right? People are betting on it. People are saying, oh, you know what? It's going to be great. Let's start buying bonds, right? And all of a sudden you see the interest rate kind of dip a little bit. And then once he makes his announcement, it's never as impactful as you think it's going to be. And then all of a sudden we see a tick up in interest rates. So for me, I think a lot of what we're going to see in 2026 are pockets of opportunity. The only thing that I'm questioning right now is like, I know that when Jerome Powell leaves in May, there is going to be a little bit of a shakeup. I don't know what rates are going to look like then. I don't know how long that's going to last. I think if someone walks into that office, they're going to want to make an impact. But I also think that by bringing rates down, and if they do this huge buy of bonds, and because they'll be, let's put it this way, they'll be in certain camps, so we could see a big bond buy. But I think if we get ourselves in the 5%, like if we get in 5 interest rates, like 5.5, 5.6, I think that's where we need to be. I think any lower than that, I think all of a sudden we get into problems that we were having back in 2022. I think 5 in the 5s is gonna restart the market. I think it's gonna be good for buyers. I think it's gonna be good for sellers. I think Sacramento will get that like jump charge and we'll be able to go again. But I think if we just bring it down to like, something in the 4s, I think our market is going to I think it's going to be artificially kept down that much. And I think that it's not going to be good for our real estate market in the long run. But I do think that you are going to see a bunch of those things happen, a bunch of stuff where like, you're going to have people like Trump, Elon Musk, and they're going to make some big announcement about how they're going to do something that's going to change the world. And then all of a sudden we're going to see a little bit of a dip for a few days, and then it's going to go back up to where it is. I mean, you saw what I've shown you, right? I mean, literally announcement, boom, back up, and it's going back up. So I think that's kind of what we're in for. I think it's less about the impact of 200 billion and more about just the idea that 200 billion is going to be like this and that, and it's going to be more and more and more, and it's going to be super impactful. We got to jump into the bond market now. And I think that's what we're seeing, or at least that's what I saw. I was thinking to myself, man, there were probably a lot of people who got so lucky on Friday or Thursday and Friday when they were buying, because they probably got into the 5s. And if you're VA lower than that, or FHA even lower than that. So I don't know. All right. First time buyer grants and all buyer welfare are terrible. And need to go forever. Nothing anymore. Demand side stimulus just inflates house prices and helps rich old people. Okay. All right. Hey, Mark. Now I understand why Gold River HOA payments are low as compared through the roof for some residents. What can you do? I wish you had a cap would be enforced. Here's the thing. One thing, Wendy, and I say this to you. Oh, by the way, I totally apologize for not giving you a call later today. It was just crazy. Car stuff and everything too. So we'll touch base tomorrow morning, I promise. I would say this. Number one is if you're in an area like a Gold River, and if you see HOAs going up, get yourself a seat at the board, go to those meetings as best you can. I know it's tough for you. I totally understand, but I'll tell you something. Like there are Zoom links sometimes they send there, and you just have to be vocal. I know one thing about ours. We had one of these things where they said, if you have like 3 cracks in your driveway, you have to redo the driveways. Every single resident showed up at the meeting, and we vetoed that down. There was supposed to be an increase for our community as well, or our village as well too. Everyone showed up, and we shot that down as well too. There are certain things that certain communities do, and I'll basically not mention names, but a community that I know really, really well was actually towing people. Like they're towing people. No one in the community gave authorization to this towing that was happening. But the towing was being charged to the HOA and to the people who lived in the HOA. No one approved it, but the board agreed upon it. It was not just the HOA members from the community. It was the board the main counsel of the board. And so I think you really need to kind of look at the books. I think you need to look at where all the money is going towards. And I think a lot of times, like, you're going to be surprised and shocked at what some of this money goes towards. So that'd be my 2 cents. All right. Gold River HOA payments would be $1,000 for some residents in a few years. Yeah, it's going to get higher and higher and higher and higher. Delaware Property Management Company. Also, I work closely with a couple of property management companies in the area. Ben, first of all, he can rent a place like in 2 weeks, and he gets these houses rented quick. He is from Folsom Key Finder, and he does everywhere, but he's a rock star. He rents properties so fast, and he's so good. If you want his number, just hit me offline. My number is in the banner, and just text me and say, hey, could you give me Ben's number? And I promise, I will not try to get you to sell your house in Folsom, because honestly, I wouldn't sell your house in Folsom. Keep it. That Folsom property is going to be probably worth a whole bunch of money. All right. Thoughts on buyers, agents being slow on running comps and submitting offers. Agent has slow. And what do you think? Trump will announce next. I think the thing about Trump is, and I don't go political on any of this stuff too. I just think that he has such a loud voice that when he says something, it does affect markets. I mean, we saw that his voice basically with Fannie Mae, I mean, that moved the interest rates. So I don't know what he's up to. And that's the scary part. I don't know. I mean, he could, 2 a.m. do something. I have no idea. But I mean, definitely what he said and what he was telling, about Fannie Mae, getting them to buy, 200 billion, whatever, it's just, it moved markets, and it's crazy. But that's kind of the kind of like economy, the kind of like, the kind of world we live in right now, which is just crazy. Also, here's the thing for you guys too. Okay. Everyone normally nowadays you have to sign a buyer broker, right? So you sign up with an agent, you sign this buyer broker, you do the commission thing and everything too. Okay, that's good. All it takes is literally a letter firing your agent. And I even tell our clients that too. I'm like, don't worry about this. If for some reason you hate me, just send a note and we're done. So I would say if your agent isn't working with you or you're not happy with your agent, find another agent that does. And that's one of the things that for me, I kind of laugh at, a little bit. I'm like, I think there are a lot of agents who are a little nonchalant, little agents also who don't take their time finding people houses. Like, for example, like Wendy, she was just talking right here. I've worked with her for like, I don't know, Wendy, what do you think? A year. And we haven't found you that one house that you really, really love. It should be more about that. And you should be responsive and you should be going and you should be submitting offers and you should be aggressive for your clients. If you're not, and if you don't have the bandwidth and time to deal with them, communicate that to them. But I do think that, realtors and our clients, we're not like this, right? We work for you guys. And that's kind of part of the reason why also like one of the things in real estate that drives me nuts. And I know this is kind of like a pet peeve of mine is I run into realtors in the field all the time. And they're wearing like t-shirts, flip-flops and shorts and all this kind of stuff too. And it just drives me kind of crazy. Because I do think there's a little bit of like, presentation. I do think there's something about dressing up for clients. I do think there's something about like giving you that whole thing. I think it's job interviews every time you meet with people, and I think that there's not enough of that in the Sacramento area. And I think there should be. And I do think, honestly, if you are not getting good service from your realtor, you should fire them. I'd maybe talk to them if you like them and say, look, this is what I need. And if you can't do this, then I'm probably going to look for someone else. It's up to you. But for me, if I was not a realtor and I was looking to buy a house and I felt like someone was slow, they weren't good at negotiating, they couldn't accommodate my needs, I would go somewhere else. At the end of the day, you got to look out for your family. You got to look out for your bottom line. All right. Glad you popped into my feed. Moving or maybe is all I can think about. It's to read time out. Well, here's the thing. Like I said, I got a good rental person for you. I think, don't sell your house in Folsom, in my opinion. But there's some fun spots in the Sacramento area you might want to look at. All right. I agree. The announcement has much more impact than the actual action. However, it looks like he's really intent on moving the real estate market that's gotten stale. Look, here's the thing. He could be. For me, one of the things about this is that it's going to be interesting to see how much of an impact he is on the person that takes over for Jerome Powell. That's where it's going to be that's a part of it that I'm really kind of curious about myself. I don't know. I mean, I mean, it's going to be Ivanka. I mean, who's going to come in and replace Jerome Powell? Is it going to be someone who he can kind of like dictate what's going on, and everything too? That's the part that's going to be really, really interesting. A lot of people are saying that whoever goes in for Jerome Powell is basically going to be, that person. So, it will be interesting in May, the type of person that goes in there. And yeah, I think you're right. I think if that person goes in and they need to appease, I think we could see some crazy things happen. And that's kind of why I tell people too. I'm like, I don't know how long it'll be, right? I don't know if it'll be a day thing, a week thing, a month thing, 2 months thing. I don't know. I don't know how long, if it does get impacted, how long it'll be. But for me, I always say to myself, like, if I'm in that situation and I'm thinking that's what's going to happen, I would much rather get the house ahead of time. And then when that does happen, refi, because the last thing I want to do is all of a sudden rates for some crazy reason dip to a crazy, crazy interest rate. And then I'm out there going like, I got to find a house. I got to find a house. I got to find a house. And I'm so focused on the interest rate that I buy a house that doesn't really do it for me, right? I'd much rather buy the house. And if I'm thinking rates are going to drop in May and all that stuff too, I'd much rather be in the refi way as opposed to out there like, I got to get a house, got to get a house, got to take advantage of this rate. And I think a lot of people are going to be in both camps. It'll be interesting. All right. For example, the new bill he's proposing for a year includes a lot of stimulus points for real estate. For example, tax credits for buyers selling their homes to their tenants. Yeah, there are crazy tax credits. Like, what was it? It's supposedly like a $40,000 tax credit for people who own their homes and stuff. I'm not saying, how can I say it? I'm not saying what he plans on doing won't help the market and won't help the interest rates go down. I'm just kind of curious about the long-term effects of what he does to the market. Like, let's say, for example, you're someone who says, you know what, I'm out, in a few years and everything too. Let's bring the interest rates down to 2.75 again. Everyone's going to be happy. Everything's going to be good. I mean, we've seen kind of the long-term effects of that, right? We're living it right now. I mean, the reason why right now buyers aren't happy and sellers aren't happy is because we artificially kept the market down to like 2.75 when it shouldn't have been that way. And we're suffering from that. Inventory, as you saw, was really, really low. And then all of a sudden, like, pricing wasn't great as well too. So for me, I just don't want us to do something that is going to be a temporary fix and just create long-term problems for our real estate market. That's the only thing. Because I get it. A lot of people right now are like, hey, I got my 2.75. I'm living the dream right now too. But how about like your kids who get out of college and now are, saying, hey, I got a 6.2 interest rate, house prices are up and I can't buy a house. So I just don't want there to be long-term, problems for the market for like a short-term thing. I don't want to, I don't want to step over $1 to pick up a penny type thing. So that's the only thing that I'm a little nervous about. Because at the end of the day, all this is going to come back. I mean, if we get rates down to like, let's say 4%, right? I mean, our market going down there that fast, I mean, we're going to have long-term effects that are really going to affect buyers and sellers and everything too. Again, I'm not saying that that's a guarantee, but there are some things that I found interesting, like knocking out BlackRock from single family homes. There are some things that I'm kind of curious about what's going to happen. Because if that stuff is going to happen, it's probably going to happen this year. I mean, with Jerome Powell getting out, there's probably going to be a big push April and May. And I, just like you guys, I'm very curious as to what's going to happen. And for me, guys, on this channel, I don't like to like guess and I don't like to this. I mean, now and again, I'll put my 2 cents in this. I just think that myself being a realtor, I think sometimes I'll have a lender on. We're at the mercy of, the Fed. We're at the mercy of the bond market. We're at the mercy of politics, black swan events and everything too. So we can only kind of look at what the market's going to be like if it kind of keeps going to what it is. So just, kind of keep that in mind. All right. Boom. I've served on HOA boards. We haven't seen anything yet on how much dues are going to need to increase just to keep up with recent inflation. I bet 80% of local HOAs are underfunded. Interesting. Ours is hilarious because we have this one guy he actually lives near me and he's a CPA and he's like, I want to see all the books. And he saw the books and he found out that a bunch of money was going towards towing people and he just lost it. Good for him. All right. How much of the max concessions do you think builders are willing to part with to get someone into a house if they're trying to get it into contract ASAP? It depends on the builder. It depends on how in demand the community is. It depends on if you are finding that one house with a 50-foot lot that other people really, really want it. Now, let's say, for example, you go to like Taylor, okay, and they've got 3 homes, same floor plan, and they're and they've been sitting on the market for about a month and a half. I think you've got room to negotiate the price. I think they'll probably kick in solar. I think that, you'll probably get some other stuff thrown in as well too, like appliances and everything too. I think, yeah, like I said, you have a lot of room to work with, but it's also about sizing up the builder. It's all about seeing how many quick move-in homes they have. And also finding out the quick move-in homes, seeing exactly which inventory is moving, which isn't. A lot of times we work with people and they like a specific floor plan that nobody else likes. And, that floor plan has 3 or 4, like for example, the Highland up in Folsom Ranch. I mean, the last model home, the Highland sold like for 8 something. And, there were a lot of people buying that home and it was going into the 9s, over $1 million. I heard one person actually bought over $1 million, but because it was a QMI, it was the last home, they wanted to get rid of it. They made a deal and they got rid of it. So I think it's just about sizing up the community, figuring out where they are. Understand that the quick move-ins, anything they have on the market right now, that's kryptonite for the builders. They want to get rid of it. Now, occasionally they'll be able to gauge traffic. So if there's like one move-in home, but they've had 3 or 4 people interested in it, they're not going to be willing to negotiate that much. I've seen right now, maybe probably like one community at JMC was willing to go down 25 grand on their home price. One community at Beezer was willing to go about $12,000 on their homes. And these were homes in the 600s. So there is wiggle room. I think you just have to I think you have to go in that market also, and find maybe a few options so that you're not so hell bent on one house and you're like, oh, that's the house we want. We can't lose that house. That house is our dream house, our forever house. If you go in there like that, yeah, you're not going to be getting a great deal. But if you go in there and say, you know what, there's a house at Beezer we like, there's a house at JMC that we like, there's a house over there at Woodside as well too. All these 3 houses we like. The one at Woodside has been on the market a little bit longer. The one at Beezer, we like the location a little bit better. And the one at where the third builder is. If you have some options, then I think you go low, and whichever one bites the best, that's the one you do. So I think there is validity to making sure you see all the communities, all the areas, and at the end of the day, having maybe 2 or 3 options and say, look, this is our price. We're willing to do this, and see which one of the builders are willing to play. If you go there and you only have one builder in mind, one floor plan in mind, it puts you at a huge, huge disadvantage. Hopefully that helped. All right. Costco is opening here in West Roseville this coming January 23rd, 2026. Please spread the word. All right, I will. In fact, if you want to, I will put a big, nice announcement in my post section of the channel. But yeah, Costco, that's going to be a big one. Everyone's been waiting for Costco to open in West Roseville. The craziest part is there's also another Costco in Roseville. So you got the Costco in West Roseville opening. I think there's going to be one in El Dorado Hills, one. We've got already like in the Sacramento metro, there's got to be already like 12 to 13 Costco's, and we're just getting more of them. We are in my videos and my house tours. You know how I always go, we are Costco shoppers, guys. We're Costco shoppers. And we have a business Costco. Oof, I love that plot. So yeah, I will actually note down here, put a Costco announcement in the post as well too. Yeah. And if you guys want to spread the word a little bit about that as well too. So, the funny thing is, with our market specifically, is that you saw in 2025, a lot of projects were canceled in areas like Phoenix, Houston, like Vegas and everything too. In the Sacramento area, our projects kind of kept churning and burning. Supposedly the 50 is going to be done this year as well too. So our market, 2025 wasn't a banner year for real estate, but because of all the Mellorews, because of all the growth and everything too in Sacramento, our projects have kept going and going and going. We got that like Wave Park opening up in Roseville. Top Golf, as far as I know, broke ground last year, and that's coming in as well too. The Rail Yards is just like a gangbuster project. We got what's called that indoor arena going in downtown Dover. Yeah, there is such a thing, downtown Dover. It's gonna be crazy. And then we got the new stadium for the Sac Republic. So our projects didn't really slow. The only one that really kind of did was the X Games. That was postponed until this year. We'll see if that happens. The A's are gone, but I'm okay with that. I think we need our own team. How about the Sacramento Royals? Sacramento Kings, Sacramento Royals. That would be fun. All right, but yeah, we're still chugging along. And it's crazy because I always say to myself, like if Sacramento was still growing and going like crazy during a market like 2025, can you imagine what would happen if interest rates dropped to like 5.5? I mean, our market is going to be triggered again and we're going to be going. So, oh, by the way, guys, if you're enjoying this live broadcast, comment, smash that like button. Also, there's a hype button down there as well, too. If you guys hit that as well, too, I'd appreciate it. And we do the show I do the show every single Wednesday at 7, and it's mainly a little bit of a Q&A. We talk about the Sacramento market. We talk about new areas. We talk about projects. We talk about buying. We talk about selling. So if you're someone who's thinking about maybe moving to Sacramento and you got your list of questions and you're ready to go and you just don't want to reach out to a realtor just yet, pop on the show, ask your questions. I guarantee you I'll be able to answer them, or someone in the audience watching will probably be able to answer them as well too. It's Sacramento for me. I grew up in the Bay Area, moved here, fell in love with it, love the area, love the growth, love the people here. It's been nothing but great. And so that's my story. All right, let's go. Boom. What is Black Swan event? Oh, Black Swan events are like, I could say like COVID, for example, you know what I mean? Or stuff that is so kind of like a pandemic wise, right? That it affects the market like crazy, like, stock market crash, something like that, something that is not predictable, right? Something that comes out of the blue and no one saw it coming, so those are kind of Black Swan events. Like, for example, in 2022 or with COVID and everything too, no one predicted it. And it just drastically affected the housing market. Going to war, that could also be something as well too. So those are events that no one can really predict, but they have huge, high impacts in the market, in our economy. And so those are the things that, as much as people want to guess about them, they don't. I mean, you saw the stuff that happened with Ukraine and rates as well too. That stuff really does impact, our economy, and then it does in turn impact our interest rates. All right, boom. Does hitting 10% down to raise the cap from 3% to 6% make a difference at all, or do they usually stay below 3%? Should I keep the cash on hand or push for 4+% concessions? I would push. That'd be me. It all depends on your interest rate. And I think we're talking about the same thing. I apologize. This part of the show, I'm kind of going, but I would say for me, like KHOV is offering like 3%, 3.25s and stuff like this. There's a lot of companies or a lot of builders are offering like 3-2-1 buy downs. I think they can accommodate, whatever you're looking for. So I don't know. I mean, I think like I said, I think we're going to see you tomorrow. So I think we're going to push the envelope to see what we can get for you. It'll be interesting because you'll know, because we'll do it with you on the phone. so it'll be fun to watch, and we'll see what they give us. And at the end of the day, like I said, tomorrow we go see KHOV. And there's a couple builders there that you're interested as well too. And we'll start kind of narrowing the gap as to like what is going to make sense for you. But this is the part we like, and this is the part we're really good at. You're in good hands. We'll make sure we take care of you. What's the bottom line? Do you like it? Do you want to buy it? What's the bottom line? Do you like it? Do you want to buy it? I'd say the bottom line for this channel and for what I've always told people this is time your life. Don't time the market. I think right now with the media and everything too, there's so much noise out there that it's hard to do it. It really, really is. Everyone's focused in on interest rates and all that stuff too. And there's so much just noise out there, right? Like, you look at the 10-year treasury and you're like, you know what I mean? Like, you're like, oh my God, look at this. It's dropping a little bit. Well, there's so many things to watch, and there's so many things that impact the market right now too. It's tough. For me, here is the Sacramento market, right? And it's saying here, and this is Altos, pretty much straight up a great place to kind of look for stuff as far as like statistics. And here it's saying a strong seller's market. Even though the stats are saying that, I still don't see it being a strong seller's market. In fact, it's in resale at this time. It's all about who wants the house and who wants the house or who wants to sell the house more. And that's who wins in this market. And if you look at this right now too, with Redfin and their housing data, look at this. You notice how like right now, 2023, 2024, 2025 are looking are really similar. Again, I'm thinking that could be our year, which is kind of crazy. Hopefully not, but it is what it is. Thoughts on ARM rates? I see 5.1s at 5.3. I mean, I think ARMs are as long as you feel that, rates are going to drop or you're good with that final rate, I think they're okay. For the new homes, I think they're offering way better than that. I've seen KHOV do arms that are like your end rate 3-2-1 buy down. I think is like a 4.85 or something like this. So I think 5.3. I mean, like I said, it all depends on what's happening this year as far as rates go. And that's where arms get kind of interesting, right? Like, let's say, for example, you get an arm and after, let's say it's a 3-year arm and after 3 years, it's 5.3. What if for some reason during this year we drop, let's say we drop into a 4.9, then it's kind of like, I don't want to say a waste of money, but it's a little bit like gambling, if that makes sense. All right, boom. What builders typically offer the most insane price drop incentives to clear a move-in ready home inventory? Lennar is just notorious for the undercut. They will just go in there, and when they're ready to ditch a community, they're just like gone. Do you know what I mean? Like just gone, gone, gone. Like, and I would say though, for incentive wise, I'd say for price cuts, Lennar definitely has that. I mean, you go in there and like, let's say Bob bought a house for $1 million, like one day. John is going to go in there a week later. If they want to get rid of the exact same house, they'll sell it to John for like $100,000 less, and they won't even blink. Now, as far as incentives go, I still think it's impossible to beat KHOV and Rancho for incentives. The incentives are offering are better than I've seen anywhere. I'd say JMC in West Roseville is pretty good for what they're offering, and they're willing to work on prices. The only thing I will say about JMC, and this isn't a lot of communities, but some of the communities, what I have seen is JMC is doing something good and something interesting for me. And I don't know, I want to ask you guys what you think. Okay, so majority, I'd say maybe 95% of the homes, new homes being built in the Sacramento area, are built with tile roofs, 50-year tile roofs. Now, what I've been noticing is that JMC isn't. They're building the shake roofs, you know what I mean? Like, and those roofs last for maybe like 15 to 20 years. But some of their houses, they're landscaping the backyard. So what would you do? Would you rather take that 50-year tile roof, or would you rather take a 15-year roof, a shake roof, and have a landscape backyard? That's been really interesting, because that kind of threw me for a little bit of a loop, because GMC is like, yeah, we got these backyards that we're landscaping for our clients and everything too. And then I go out there and I see the roof and I'm like, oh, I see where the money went to. So for me, I'm curious, what do you guys think about that? All right, boom. I got a 2-1 buy down, 3.5. Hold on. Sorry about that. I got a 2-1 buy down, 3.5, 4.5, 5.5 back in October, 20-year though. Okay. I mean, that's still pretty, I mean, as of right now, that's still a great deal. I mean, ending up with a 5.5, that's not too bad. The biggest thing is like everyone's mentioning, will there be any late night tweets that jar the market? What's going to happen in May when Jerome Powell decides to say adios to us, and who gets put in? And that's where everything is going to be interesting for all the people who are doing buy downs, for all the people who are doing arms. I mean, what happens if for like a 3-month span, we're in the 4s? That's where it is going to get really, really interesting. All right. So like I said, Redfin data, we're getting closer. I mean, look at this. Almost identical, 23, 24, and 25. Like I said, I see that as being our year. And here's the thing. Like I said, Trump announced this and everyone's like, oh yeah, this is going to be a huge impact. We saw a little blip. And why did we just see a little blip? Well, this is where it gets really interesting. Mortgage rates didn't respond favorably in the news, with its 30-year rate dipping below 6% on Friday for the first time in nearly 3 years. True. In theory, increasing Fannie Mae and Freddie's MBS holdings should be favorable. Now, I'll skip a little bit. However, with the total U.S. market for mortgage bonds estimated to be about $12 trillion, it's unclear whether the $200 billion buying spree proposed by Trump would be even enough to make a big difference for a long-term run. This is kind of what I'm seeing. I see a little bit of a blip, and I don't see this being a big something. I don't see this bond buying being huge, but I do see his announcement, the way he made the announcement, giving buyers a little bit of a pocket, like maybe a day of a pocket to jump into the market and, maybe even refinance. So that's kind of what it is. And here you go. Some fun ChatGPT graphics for you guys. I think that our market also is going to be driven by media. I think media is going to come out there. I think media is going to tell you it's a buyer's market. It's a seller's market. It's this, it's that. Everything's crazy. Like I saw this one video, this realtor was going like, buyers are getting out of contract. They're ditching their homes and everything too. And it's like, it's seasonal. I mean, it's so seasonal, it's just not even funny. So I would say media hype, just make sure that you're, watching and trusting the stuff. And also make sure you're doing your due diligence to go out there, look at the 10-year treasury bond, look at the interest rates, look at all the announcements that are being made as well too. There is a little part of it that, you just got to jump on it and see, see really what's kind of going on. All right. All right, here we go. I've noticed the cheapest out on the roofs is W in Roseville with Rancho. I'm not paying that much for a cheap looking comp roof. Yeah, and that's what was interesting. I mean, I get the fact that they did the backyard landscaping, but it was just, for me, it was just really, really interesting. Lennar and Rancho built a community with shingle roofs. Ooh, I don't really go to Lennar that often. Shingle roofs and another community across the street with roofs. Make it make sense. I know. That does not make sense. I mean, stick a community with at least one roof style. I mean, how annoyed would you be? Okay, considering the factor that most people don't live in their houses for more than 5-7 years, I like tile roofs. But at the same time, what do I care that it's a 50-year roof when I know deep down I won't be there that long. Now, here's where it gets interesting though. For resale, like here's the thing. Let's say you're in their house for like 7 years and then you sell it to someone and they're selling it. Already you're at the end of life for the roof. So, that does become one of those things for resale that it does come up. I mean, all of a sudden you got like roofers coming up saying, oh yeah, we got to replace this. We got to do that. You need a 2-year cert and everything too. So it does all those little things. Like for example, like, schools, like roofs, like location, like traffic, all those things come into play at the end of the day for resale. So those are the things to factor in. It's not really that you'll be living there for that long or anything too. It's just about like how big of an impact that'll be when you go to resell your home. I mean, will it be something that all of a sudden, all the other communities have tile roofs and this one doesn't? And it's like, which one of these things is doing its own thing, and it doesn't belong there. So I would say that we work with a lot of clients and majority of the stuff that we're talking to them about is like, for resale, that's not going to be great. This is going to be that way and everything too. And giving them a little bit of the pros and cons on, kind of like what makes sense and what doesn't. I mean, a lot of people, like for example, those Shawwood homes, which I love, are like right by the 50. And a lot of people are like, we've shown those homes and they're, I don't mind the 50 noise. But I'm like, you know what? The person buying your home next might. And then all of a sudden you've got that issue where you can't unload the house. And you are right. 5 to 7 years is where people usually kind of lay as far as like living in a home. So those are just some things to factor in. Again, your house, you want to live in it. You want to have the memories, all that kind of fun stuff. But at the same time, it is a little bit of your asset. And you just want to make sure that, you don't do a little bit of a gotcha. And then later on, you're paying for it. All right. Boom. All right. I got a 3.99 7-year arm with Pulte. I like Pulte. I really like their floor plans. They covered $32K of closing costs and offered $40K towards upgrades and paid my agent fee. Kind of crazy. Yeah. Oh, one last thing to say. I will tell you this, and this goes for anyone watching the show. One of the things our team does is that the builder will pay our entire fee. If the builder offers $5 for a realtor fee, that's what we get. You will never pay for anything out of pocket when you work with our team. I believe that we're pretty much the only team that actually does this in the entire Sacramento area. Whatever the builder's compensation towards the agent is, that's what we get paid. Now, where's this kind of going? Where's this going, Mark? Well, a lot of times you're going to sign this buyer broker that says 2.5 or 3% for working with a realtor. Okay. So what you're going to notice is sometimes you go to these builders that are offering maybe $5,000 compensation. What happens at the closing is that $5,000 goes towards the 3%, and then the remainder comes out of your pocket. So one of the things when this buyer broker came about that I did with my team was I said, like, we're not for new homes, we're not dealing with that. It's going to be straight up out of the builder's pocket. That's what we're going to get paid because we didn't believe that it was right to sell new homes and actually get a penny from our clients. So if you guys are looking for a new home team and it won't charge you anything, that's us. And I believe we're pretty much the only team that does that. All right, boom. There aren't even good comp roofs. They're putting, oh man, I started a pilot. They're not even comp roofs. They're putting base model cheap comp. They could at least do dimensional shingles for like $2K more per house. Makes me wonder what else they cheap out on. Like, here's the thing I will tell you about JMC. JMC for me, I've never had problems with. JMC has always been very solid, very good. They're building a whole bunch of communities too at Placer One. It took me by surprise. And like I said, I'm not pro con. I mean, I love the backyard landscape. It just was, it was definitely something that just stood out to me. I was like, interesting. Okay. Yeah, it just kind of like, it just made me really, really interesting. All right. Are metal roofs better to have in the Sacramento area? I think so. I mean, I think they last longer. Well, no. Okay. Let me reverse. You're talking about aluminum, right? Aluminum roofs. Okay. I have an aluminum roof in my house. Now think I'm so lucky I'm in smud country, right? But it would be so horrible if you have an aluminum roof, and you're anywhere that electricity prices are crazy. Why? This is a good one. Because there's too much liability involved for them to put solar on aluminum roofs. I found that out before I purchased my house, of course. But I talked to a solar company. I said, hey, the first thing I want to do is I want to put up solar. They told me two things. One, you're in SMUD. Don't even worry about it. You don't have to deal with it. And two is we can't put up solar in your house because the liability in putting up a solar in an aluminum roof is way too much. So I would say that as far as aluminum roof, just make sure that if you do plan on putting solar, that they're able to do it. For me, they weren't able to do it. So that's just something to kind of keep in mind. But I think aluminum does last long. I mean, my roof looks perfect and it's been around for like 20 years. All right. I would choose a high quality roof. No question about it. The landscaping as I could afford it. Okay. Yeah, I think that that's a little bit of the consensus. For me, it just kind of, I was like, oh, okay. Because it was so funny because I didn't really notice the roof at first and I saw the landscape. I'm like, man, that's amazing. You guys are hooking up the landscape and that's so nice. That's so needed. And then I saw the roof. I was like, oh, okay. Maybe I can see where the money came from. All right. Anonymous. Sure. But yeah, like the house you live in too. If you bought it, someone else will too. At the end of the day, it's a home that hopefully appreciates, which most of the time it does. Yeah, I agree. I mean, I will say one thing, and I always go back to this, like, my parents bought a house in a community in a house that they really loved and all this stuff too. And I think that at times, even myself, right? At times I get so caught up in the idea of like, if you sell this house, the appreciation, it's your investment, everything too. I think at a certain time you are right. You just have to kind of enjoy the house, enjoy the memories. I can tell you one thing, one of the things that I can't factor in because the price is just, there's no price to it, are all the memories I've had in this house. My daughter learning to swim in this house, all the holidays and everything too, having people over. So yeah, I agree with you. All right. What's your buyer's agent fee percent for existing homes? 2.5. That's normally what we charge for that. And it's pretty much the standard. I've heard of people charging 3.5, but truthfully speaking, I think that that's a little too high. So we stay with the standard and we bust our butt. Not only that, what you're going to notice is the way our team works is you get me, but you also get an additional agent as well too. So there's two people that work with you. That way, if I'm at a dentist, Nikki's there or Michelle's there or Robin's there. With the clients that we have coming in tomorrow, it was both of us. Then Nikki was there because I had some car issues. And then tomorrow it'll be me and Nikki as well too. So we like that team concept. It really does work really, really good because what you're going to notice, and like that comment that went, that was about a lazy agent and everything too. At times what you'll notice with realtors is they take too much on, right? And that's one of the things that I found really, really brutal about real estate is you work with an agent and maybe they're slow for the time being. They'll work with you. They'll give you fantastic service. And then all of a sudden they get another lead. They'll get another house. And all of a sudden service will start to dip. For me, one of the things about our team specifically was that I wanted to make sure that we had enough people on the team, quality people, because every person on the team is amazing. I wanted to make sure that if you had a question, you could have it answered. Like, for example, if I'm on the show for like an hour and a half and you have some like urgent question that you need answered within 30 minutes, you'll text. I'll probably see it while I'm on the show, but Nikki will be able to respond to it. So I wanted that kind of like what's called redundancy so that you guys always knew that phone, text, email, whatever you need, we're like right there. And I would challenge any team in the entire area to be as responsive as 24/7. That's kind of what we're there for. And I think that in this industry, in this market, for the type of purchase it's doing, like you guys deserve A+ treatment. That's what we deserve. That's what we deliver. All right. Team Kahan stands with Mark. I love it. I love it. Lacey, and I'll see you tomorrow at 10 a.m. Yeah. All right. Let's go into some more fun stuff and I'll let you guys go for the evening. All right. So here's the thing that I will tell you straight up. Media is going to create these little bit of these pockets of opportunity. And I truly believe this because I saw this last year. What you notice is before Jerome Powell made an announcement, we saw a dip in rates. And then they went back up after he was done his announcement. So you are going to probably see pockets of opportunity happen during 2026. I think those pocket opportunities are perfect for the refi. For the buy, they just get a little bit of tricky. So I would say just understand that that's probably some of the stuff you're going to see in 2026. Oh, right. Hold on. Another question. All right. Was checking out the new homes with my agent. He insinuated I was affecting his mental health because I can't make up my mind after I said I didn't want Lennar. Laugh out loud. I was doing 9% of the work. And that's, yeah, I mean, that's horrible. That's so horrible. I will tell you one thing. I mean, in real estate, with the new homes, like you got to really work with someone who like loves what they do. And my team, none of the people on my team do it because they have to do it or they have to make that paycheck. Everyone does it because they love to do it. That's one of the prerequisites. We love what we do. We love working with clients. We love just showing homes, and we're very observant. We're smart as a whip, and we love to bring that to the table. So yeah, for me, I mean, Sam, next time I'll be working with you, but I think that, the realtors who do real estate just for the check, I think hopefully they get pushed a little bit out of the market, no offense. And I think the people who actually are like fighting for their clients, the buyers and the sellers, and really love what they're doing and are passionate about what they're doing, like, I hope those are the ones that stick around. In Sacramento, it's been kind of funny, some people see me like, sometimes I'm suited up and everything too. And they're like, you're all dressed up. I think Sacramento realtors were slipping a little bit. So I think that you guys, if you need great service, you should definitely not settle. If I was not a realtor and I was looking for a home, I definitely wouldn't settle. All right, let's go to some questions. Then we're gone for the evening. Too many new home communities, non-Sac proper near the urban core. I don't think there is any. Drum roll, please. There's one coming out. Lacey actually brought this to my attention and is popping up in Midtown. And hopefully I get to do a tour of this community because I agree with you. We want to see more new home communities in the Midtown, kind of downtown, kind of urban area. And this is a Beazer community and it's popping up downtown. And I'm going to be doing, hopefully, if Lacey lets me, video tour this for you guys too. But yeah, it's coming up. So it's going to be fun. And like I said, if you want to learn the skinny on what's going on with new homes, resale homes, anything happening in Sacramento, Wednesday, 7 p.m. All right, who wants to see a model home tour in the new 1 acre community Toll Brothers building? El Dorado Hills for the win. I'm also going to be able to get into some of the Toll Brothers homes before anyone else is. The fun thing is right now is that I've been getting a lot of invites to a lot of events of communities that are opening up, and they're letting me videotape them and film them before they actually come to market. So you guys are going to get that stuff firsthand. So a lot of the communities you're going to see, like for example, Woodside, Willow, and Aspen, they just opened up Saturday, but we had the videos for it like 2 weeks before. We're going to try to do that for Toll Brothers. We can try to do that for Taylor, Beazer, and all the communities that are smart enough to invite us out there to do it. All right. Who thinks our economy is in trouble? California, yeah, but not the U.S. overall. It needs to fall. Can be restructured properly. California first. Here's the thing about us. I will say this. California, the 4th largest economy in the entire world. If we're in trouble, everybody's in trouble. I will say, though, it would be nice to see California get the reins pulled in a little bit, too. I think we have a lot of potential. But yeah, I'd love to see it improve as well. All right. The American population is too busy on all forms of social media to grasp what the wealthy billionaires who run the country are doing. The BBB just gave more tax cuts to the wealthy, the impending percent tariffs tax. Yep. I will have to say there is a lot of people who are not happy with the economy here. All right, California economy, sadly, but other states are doing fine. I don't know. Honestly, I think California, because we are such a big economy, there's a big spotlight on us. I don't know how other states are doing. I don't, and I'm not saying that like as in like, I just really don't know. I don't really pay attention. I'd say real estate housing market. I would say if you looked at Sacramento's area, not just California, not California, but Sacramento, I would say, show me a market that's after going through a 2025 that's as healthy and ready to charge again. I'd love to see that, and I've actually invited some people, other YouTubers on the show. I talked to a guy in Dallas and I said, bring your A game and let's talk Dallas versus Sacramento, Houston as well, Denver as well too. So I've been trying to get other people from other areas on here because I would love to know how good their cities are. Cause I think Sacramento, I think we're in kind of a class of our own right now. All right, moving to Sacramento. The east part of Rancho Cordova has higher risks of fire. This realtor never talks about. I will tell you this. We've moved in a lot of people to new homes in the Rancho area, and none of them have complained about home insurance prices. Now, that's not saying that, actually, let's do this. That's not saying that he's not valid about what he's saying, although it would be nice to have some kind of shred of proof when someone's saying something. But I will tell you this. The Rancho area is talking about is this area right here too. Now, for us, for the new homes, what you're noticing is in the new home area in Rancho, there's a brand new fire department out there as well too. But could I see there being a little bit of problem with home insurance as they go further out? Possibly. Now, here's the thing. I'm not a home insurance specialist. I can only tell you from the clients that we've moved into the Rancho area that no one's really had a big issue with home insurance. Might that change? Possibly, guys. This is California. This is what it is. Now, I will say one thing. Before you pull the trigger on a home, whether it's Rancho, whether it's El Dorado Hills, whether it's Loomis, wherever, no matter where it is in the Sacramento area, California or whatnot, talk to a home insurance specialist. Make sure they're a broker and find out what that's going to run you. Don't leave it to the last minute. Talk to someone. I've got an amazing contact. So if you need someone to talk to a little bit about that, I can definitely help you with that and point you in the right direction. But at the same time, figure that out and kind of all those little things like, PG&E versus SMUD, water bills, HOA restrictions, home insurance costs, all those things you've got to figure out before you pull the trigger on your house. That's one of the things that for the most part that we help with. And I can guarantee you one thing, this person who probably bought in Rancho or bought in a certain part of Rancho probably, and I would say this 100% was not working with our team because as far as we go, we wouldn't let this happen. All right. Who's waiting for Taylor Morrison's next community in Folsom? Drunk house, building trash company. Here's the thing. I've moved in, I don't know, maybe over the last 6-7 years, probably moved in at least 60, 70 people in Taylor Morrison homes, probably more than that. I've only had one complaint from one client for a Taylor Morrison home, and that was up in Lincoln. There was a little drainage issue because the homes were like this. Taylor was quick to fix it. And other than that, I've had really good luck with Taylor Morrison. Now, I'm not saying Taylor Morrison's perfect. I'm not saying that you might not have a house as this, but I'm saying that's our track record with Taylor. All right, Sacramento homebuyers, don't make this costly mistake. Hey, Mark, on Poison Usual, Shawwood is so beautiful. Yeah, it's so beautiful. I just need it to be built maybe a little bit further away from the 50. I'm so excited to see their new community in West Roseville. That is going to be kind of fun to watch. All right, guys, do me a favor. Throw me a like if you could. Also, hit that hype button. I would really, really appreciate it. I appreciate you guys also tuning in. This is something I'm going to try to do every single Wednesday unless I'm sick or unless there's a holiday. I really think this show is probably the most important show that I do in real estate just because it'll give you guys a little bit of that real-time information. A lot of videos, you guys have seen it, even mine sometimes, you'll say you look at a video and you go, oh my God, that house price is crazy. And it was 3 years ago. So I love the idea of giving people kind of real-time information. My team, I have 6 people on my team. We're always out and about. Elk Grove, Davis, East Sacramento, Rockland, Roseville, Grand Bay, you name it, we're out there. And we can give you a little bit of an idea of what we're seeing in the market, buyers, sellers, new homes, resale homes, and everything too, to get you a little bit of an understanding of what the market feels like. Right now, like I said, it feels a little colder than last year at this point in this market. But at the same time, as you saw those graphs that we showed, it is somewhat mimicking the last couple of years. So that's kind of where we are right now. Oh, that was a little bit of a twang. That's where we are right now. But let's tune in for the Super Bowl because after the Super Bowl, those first 2 weeks tend to be a little bit of a telltale sign. And who knows, we might get someone to push Fannie Mae to buy more bonds and it might drop the market down a little bit more. You never know. This year is going to be about this. But let's say that Jerome Powell was gone. Let's say, for example, he was staying in office or, kept his seat. Let's say that Fannie Mae wasn't going to buy any bonds. I still see our market mimicking last year's market. based on the data and based on like the predictions by Redfin, Zillow, Realtor.com. So that's kind of what we've seen. And if you guys haven't seen that, I brought those stats out, I think last week or the week before, where all the big boys like Realtor.com, Zillow, and everything too predicted like between like 1% and 2.5% growth. So probably going to be a little bit of that this year, unless something crazy happens. All right, affordable California living, interesting. I have buyers in Plumas Lake Q1 2026. I love, love, love Plumas Lake. Great gas prices. I think that Plumas Lake, the Linda area, Marysville, all those areas out there too, I think are what Sacramento prices used to be maybe about like 8 years ago. And I love the idea that you're maybe like 30 minutes from like Roseville, you can get a brand new home, nice big backyard for like 350. I love that affordability. So we're gonna be featuring some of those homes as well on this channel. All right, moving to Sacramento, and I see at least one realtor dressing up for show homes. Next thing you know, realtors will be showing up there. I ran into a couple realtors, YouTube realtors, actually wearing flip flops and jeans. Not my style. Like I said, I was raised by dressing up in a collared shirt and being presentable because I'm in the service industry and that's kind of what it's all about. But like I said, that's how I roll. All right, hoping interest rates get even lower than 5.99 today. 4 days ago. Well, you got it at 5.99, but then it kind of ticked up again. All right. Most affordable new homes near Sacramento coming in 2026. The real question is if Premier Homes will build in Rancho Cordova again. Sad we passed on that. I don't think Premier has any plans to build in the Rancho area anytime soon. I know Taylor Morrison is going to be the next big community building in the Rancho area. I also think the Reserve community by K-Hov, I really, really like that community. I also like, if you're looking for something with a nice backyard, a 3 and 2, I think that one floor plan at Willow is just great. There's going to be some options for you in Rancho. Like we saw at the end of last year, West Roseville was that spot. Everyone was buying new homes, and then Rancho took that over towards the end of last year. So Rancho's on fire. You got Braden opening up as well too, close to Folsom. But I think the two areas right now that are just on fire for new homes, deals, incentives, and all that stuff, West Roseville and Rancho, those areas, I don't see anyone outpacing either one of those areas. Right, let's get some more questions. Look forward to seeing them under 400 for sure. I'm buying 2026, done laying 2,600 for rent. Yeah, like here's the thing, hopefully there's some options. Like right now, what was it? I'm seeing 400s. There's some select communities for 400s, but you got to just know where to look. And, I'm with you. Hopefully you guys get more options, more stuff. I know Taylor Morrison's community in Rancho is going to be building somewhat like they did at Wild Hawk North here. So I'm excited to see what that does. I think there's going to be fierce competition in Rancho, which means the buyer benefits because the better the competition in an area that you're looking at, better incentives and the better the prices. All right. Who's thinking about buying? Who is thinking about buying if rates keep dropping? Not in California. They'll probably introduce a new secret property tax for each blade of grass in your front yard. That is called the secret grass property tax. Being patent, I'm joking. Yeah, there's a little truth to that stuff. Okay, insane new luxury home that people love in Sacramento area. Your cameraman should show the camera. Yeah, okay. Cameraman should be showing the rooms better, not just aim the camera at you. It's hard to see the depth of the rooms and how he's shooting. Okay, well, we're going to improve every time we're going to be shooting these model homes. We're trying to improve a little bit on how we're shooting. I would say look at the recent ones that we've shot. We've slowed it down a little bit. We're trying to show a little bit more of the room. I don't really like doing the B-roll thing because it confuses people. I've noticed that when I throw a house up with B-roll, it tends not to do as well. But here's the thing that I want for you guys, and it would mean the world to me, is if you see some of these home tours and you have critique on how it can be shot better or something that you want to see, I want to do these home tours for you. So let me know what I can do to improve, and I'll try my best to improve them because I want these home tours to be something that you guys look forward to. You guys feel like, okay, now I get a little bit of an idea of the home. Now, on the flip side of that, you're not going to buy the home looking at a video. Get your butt out here. Work with our team. We're going to show you this house. We're going to show you a bunch of other houses that compete with it. And we're going to find you your perfect home. All you got to do is reach out to our team. We'd love to work with you. This is the entree to the main course in Sacramento with so many new homes. Not only are we going to show you these homes, we're going to show you a whole bunch more because there are so many new homes out here. Floor plans, like housing styles, like elevations. It's crazy market out here for new homes. Okay. Who's happy to see Jerome Powell leave this May? Prices are going to go up if they cut interest rates too much. It's a lot easier right now to negotiate a buy if you can afford the payment. Agreed. Completely agreed. I think if we get into the fives, maybe between 5.5 and 5.9, I think that's like the sweet spot. Any lower, I kind of think we might be a little in trouble. So that's just me. Love the videos. They're awesome. I appreciate that. And you know, for me, I'll tell you this. I've worked my butt off to find the best video people there are in Sacramento, and we worked with each other. We're good dance partners and everything too. But anything we can do to improve, we're definitely up for it. And my video person, their name's Haley and Brooke, and they're amazing. And they put up with me. So that alone is pretty amazing. So I appreciate them. If you guys appreciate my video, people, smash that like button. I'm getting likes anywhere I can. And also, there's a hype button on like near the like area too. If you could smash that, that'd mean a lot. All right, who's thinking about buying if rates keep dropping, selling? Again, if rates keep dropping, that's going to be the big thing. If you're waiting all of a sudden on the sidelines and you're saying, especially in the resale market, and you're thinking to yourself, I can't wait for rates to drop. If rates drop anywhere like underneath 6 and the 5s and everything too, all the houses that you're going to see pop up that you've been drooling over and you're saying, those are the houses for me, there's going to be more competition. There's more people on the sideline that are waiting to buy than you think. And if rates get into the 5s, you're going to see some competition. And what's going to probably end up happening is you could even see prices go up. So just be aware that that could happen. It's just a matter of supply and demand. All right. Too many new home communities. Yes, no. Ooh, okay. 48%. You guys want more new home communities? Well, there's going to be a ton more for you in 2026. I know personally of at least 25 new home communities coming to the Sacramento metro area. You guys are going to be happy. Price points. There's going to be bougie ones. There's going to be affordable ones. There's going to be a whole bunch of new home communities. So hang tight. We're going to have some fun tours on this channel. All right. Who's happy to see Jerome Powell leave this May? Man, overwhelming. 59%. I'm happy to see him leave. I just don't want there to be any crazy things that are going to drastically hurt our market. All right. What else we got here? Who wins, Sacramento or Houston? Guys, we better beat Houston. Seriously. Sacramento for the win. Better deal currently, resale or new homes? New homes. Guys, right now what I'm seeing is if you're an investor, I would go resale. If you're a first-time home buyer, new homes with the incentives, it's a hard thing to beat. For resale homes, if you're someone kind of fixated on like, I want to resell a home, I want to resell a home, I would say go see resale and go see new. At least just eliminate them out of the picture. But resale at the same time, if you're seeing the inventory you like and you're saying to yourself, man, there's like 4 or 5 houses I absolutely love. They've been on the market for like 2 or 3 months. I love these houses. Go low offers. I'm telling you guys at this point in time, the houses that are on the market right now, I would say a majority of the people selling those homes know that right now it's a little bit of a soft market. It's a cold time of the year, and you might be actually able to get a deal in the resale market. Now, what do I mean by that? Not only price point, you can bake in a seller credit where you can help you buy down your rate, pay for closing costs. There's a whole bunch of ways to structure the deal so you win, which is great, which is fantastic. All right. Boom. All right. Dun, dun, dun. Do you think the new homes being built in Dixon are reasonably priced, given that there isn't much in that area outside of quiet living? You know, here's the thing about Dixon is there's not a lot of competition. And what I notice about areas where they build new homes where there's not a lot of competition, the price seems to be a little higher than it should be. So yeah, I think they're a tad bit overpriced there too. I think that if there were like maybe like 7 or 8 builders in Dixon, I think prices would be where they should be. So that's just my own. You see it like in Rancho, and then like you see it in the Vineyard area where Taylor Morrison's the only one building. You see the price point and how it kind of like it's a little higher than maybe it should be just by a smidge. So yeah, I think so. All right. Videos are great. They're only Sacramento Realtor putting out consistent quality production. Your videos helped us so much when moving to Sacramento from the Bay Area. I appreciate that. Like I'm telling you, comments like that make my entire day, because sometimes when you do these videos and you're out there and you're showcasing it and you're like, I just don't know how I did. I think it was good. Hopefully it was good. And you know, comments like that make my entire day. And I'll show this to my video crew too. They're going to love it. So I appreciate you. And I appreciate you guys liking the videos, commenting about the videos and sharing the videos. All that stuff means the world. You guys don't even know how much that means to me. So I appreciate you guys. All right. Boom. I think the best deal in Elk Grove, I think the best deal is in Elk Grove coming this weekend. Oh, all right. All right. Elk Grove in the house. I like Elk Grove. I think right now, the thing about Elk Grove specifically is hopefully there's more building happening. Taylor's pretty big over there. Lennar's building out there. You got New Home Company at Arbor. Um, Hopefully, like we'll see a couple other builders. You know, what's the interesting thing to me, and I was thinking about this, like JMC, have you noticed JMC doesn't build in Rancho and they don't build in Elk Grove? It'd be interesting. They used to. It'd be nice to see some JMC there too. But yeah, I think Elk Grove is a competitive. I think it's a super fast market as well too. I just would love to see more builders jump in there. I think KB is doing fantastic as well over there too. But yeah, if it's me and I'm looking at a growing, thriving market, you want to be at one of the closest spots to the Bay Area. Elk Grove is always competitive, always amazing. We've moved a lot of people into the Elk Grove area. And for me, yeah, Elk Grove is on fire. It has been on fire for a long, long time. But getting a deal in the new homes in Elk Grove, that's not as easy to do. If you see anything in Elk Grove that's under $600,000, those things fly. Like that one community KB had, Lexington, that thing sold out like crazy. Their other communities are still for sale, but Lexington, the one that was selling in the 4s and low 5s, that thing just gone, fast, done. So Elk Grove is still one of the most competitive markets. I'd say for like 4, 5, 6, maybe 8, it's probably the most. I'd say Folsom, if you're going for a higher price point, like 8, 9, over $1 million, that's where Folsom kind of comes into play competitive wise. But yeah, Elk Grove is phenomenal. People love Elk Grove. It's a spot where also it's funny because we move in one person, Elk Grove, and then their friend moves in, their mother moves in. Yeah, Elk Grove's its own thing. I mean, it's going to go, it's getting to the level right now where Elk Grove is really, really separating itself from Sacramento. And it'll be fun to see how Elk Grove develops. It'll also be fun to see how Folsom develops. Now, that's the show for tonight. I'll leave it at this, telling you guys that if you are thinking about moving to Sacramento, I love Sacramento. I'm the biggest cheerleader for Sacramento. I wish I would have moved here sooner. The people here have been nothing but nice. And, I've had nothing but a pleasant experience here in Sacramento. That's why I chose to do real estate. I wanted to do real estate so I can share my enthusiasm, what I found here in Sacramento with all the people who are thinking about moving in here. And if you are thinking about moving in here, if you're thinking about Sacramento, or Sacramento might be one of those spots you're checking out, take the weekend, come out here and take a look for yourself. I guarantee you, once you do that, it could change the entire way you think about, and you could be like me, wishing that you made the move a whole lot sooner. All right, guys, show's done. Thank you guys for tuning in. See you next Wednesday. And on Friday, we have the Canyon, K-Hop popping in, and it's going to be another one that's going to be great. Another community for showcasing you guys. So that's it. I'm done. Okay, guys, hopefully you enjoyed the show tonight. Buying and selling is stressful. I mean, there are definitely different avenues you can go in, and there's no guarantee. Every property is different, whether you're looking to buy it or sell it. So reach out to our team and we can talk to you a little bit about the pros and cons of selling currently, what your house is valued at, and all that stuff too. There's a link below to schedule a call. Now, if you're thinking about moving to the area, guys, reach out to our team as well. We're working with a lot of people relocating them to the Sacramento area. We absolutely love it. There's a Zoom link below. Set up a time where we can talk to you a little bit about what your needs are. Now, if you enjoyed this live broadcast, smash that like button. We would love to talk to you a little bit about Sacramento. I mean, we always are out and about. So if you're looking at places like El Dorado, Roseville, Rockland, Davis, we got you covered. Just reach out to us. And maybe you don't want to do a Zoom call, so just hit me at my phone number on the banner and we can talk a little Sacramento. Now, guys, one last thing before I go. There's a playlist right over there of other videos I've done about the Sacramento area. Knowledge is power. Those videos will help you kind of make a decision if Sacramento is that spot for you and you want to take it to the next stage. All right, guys, this is Mark. Have a good one. Hopefully you enjoyed the show. Remember, smash that like button, subscribe to the channel, and I'll see you next video.